story you will never forget. And that's like the best story. It's been 5 years. The work we did on Obamacare was pretty tough. But the work we did on this was pretty tough also. This Dodd-Frank financial regulation was a historic achievement, but not for the Congress, but for the American people. Certainly in the wake of the crippling financial crisis, which we felt all over the country. Each of us has our own horror story of what happened when Wall Street collapsed. But 5 years later, we've seen progress toward a safer, stronger financial system that protects taxpayers, consumers, and Main Street communities. These vital protections overturned abusive practices that allowed corporate greed to destroy the lives of Americans. In the past 5 years, here's what Wall Street reform has done. Returned over $100 billion to 17 million consumers through the Consumer Financial Protection Bureau. Where is Elizabeth? This was a little organization that was meaningless to the American people. That's what they told us. And the oversight of that by the administration has been really, really good. We've appreciated how it's been operated. But I have to, in passing, say, remember, President Obama had someone in mind to run that. But that didn't happen, and boy, did they, I'll bet they rue the day they blocked this good woman from running that agency, because look what she's doing now. So, Elizabeth, thank you very much for your tenacity, your hard work, and your vision as to what could happen to that little agency that is no longer a little agency. $100 billion to 17 million consumers, that's a lot of dough. We've also, with Wall Street reform, produced $286 million in paid penalties by financial institutions because of stricter enforcement. Added 12 million private sector jobs to our economy, 12 million. Today, our financial system works to help American families and small businesses instead of serving special interests that lead to Wall Street failures. Republicans want to roll back these very important legislative gains that we've had and leave little American middle class, again, without any protections. We cannot and will not go back to the corrupt financial system that crippled our nation's economy. We remain focused and committed to protecting American families and small businesses. They're our top priority. We need to keep our foot on the pedal and move forward. Before leaving, I'm going to go, we have a caucus today. I wanted to say one thing about Chris Dodd. Someone else will introduce him. But Chris Dodd was placed in a very, very difficult, hard position with Senator Kennedy being ill and having passed away when he did, because he was up to his neck involved in what we were doing with Obamacare, and then on top of that he had to do what he had to do to help us move the ball down on this Dodd-Frank legislation. So Chris Dodd and we were committed in that foxhole, and it's something we still talk about. I'm a great admirer of Chris Dodd and miss him so very, very much as a legislator. It's my pleasure to introduce the ranking member of the Banking Committee, someone that has worked so hard for the American people in so many different avenues. No one is more out front on talking about the needs of working men and women than this good man from the state of Ohio, Sherrod Brown.
Thank you, Leader Reed. Thank you all for joining us, my colleagues and all of you here. We're here today today on the 5th, my wife's 58th birthday and the 5th anniversary of Dodd-Frank becoming law. I was placed in that order. I was placed on the Banking Committee when Leader Reed called me in the fall of 2006 after the election, said, I'm putting you in banking. It looked like a sleepy committee. where there wasn't going to be too much happening. Then came 2007, 2008, 2009, and ultimately enactment of Dodd-Frank. The 2008 financial crisis, the worst since the Great Depression, was preceded by a decade of unfair lending and deregulation and lax supervision of Wall Street by regulators. The biggest banks' recklessness led to the loss of 9 million jobs, 5 million Americans lost their homes. The zip code that my wife and I live in Cleveland, Ohio, 44105, in 1 year in 2005, I believe, had more foreclosures than any zip code in the United States of America. $13 trillion in household wealth was erased. Congress responded by putting in place new rules to stabilize the markets, to protect consumers from abusive lending practices by cracking down on the reckless gambling that almost destroyed our economy. Today, our financial system is safer, it's more stable, it works better for taxpayers, investors, and consumers. And the law made it less likely that taxpayers will once again be forced to pay the tab for another bailout. Despite Republican doomsday predictions that Chairman Dodd and all of us heard in those days, Wall Street reform didn't ruin the economy. It strengthened it. It stabilized it. Over the past 5 years, the private sector has created 12.8 million new jobs. Household wealth has grown by almost $30 trillion. Business lending has climbed over 30%. Republicans are still bent on undermining Wall Street reform and the Consumer Financial Protection Bureau. We've already seen it in the Banking Committee. We've seen it in the Budget Committee. We've seen it in the Ag Committee. We're going to see it tomorrow in Chris Coons' Appropriations Subcommittee. Instead of working with Democrats to improve and strengthen Wall Street reform, Republicans are trying to tack onto their controversial legislation to any vehicle that moves and dare the president to shut down the government. Dodd-Frank, of course, isn't perfect. We still have too many mega banks, still too big to fail, often too big to regulate, often too big to run. We must do more to stabilize our housing market, to protect consumers, and to grow our economy. Protecting the reforms we've won is not enough. We can't let special interests and their allies in Congress undermine reform and have us exposed to another AIG, another Countrywide, another Lehman Brothers. We've come too far to let that happen. I'd like to turn things over to Chairman Dodd.
Thank you very much. Just for a few minutes. Just for a few minutes. Well, it's good to be back. And let me begin by thanking the leadership, Harry Reid, Dick Durbin, Chuck Schumer, Patty Murray, for what they did back 5 years ago, how time has gone by so quickly over those past 5 years. None of this would have happened without leadership. That made a big difference when we were moving forward to try and craft the legislation that became the Dodd-Frank legislation. So I want to thank them for their support back in those days, what made it possible for our committee to do the work that we're able to do. And a number, obviously, here today. Chuck obviously was part of that, as well as Jack and Sherrod made a big difference as well. Chris, of course, Jeff Merkley as well as a part of all of that. You've heard the recitation. People in our country were blessed and burdened with almost no memory from time to time. And even though it's only 5 years, it's always stunning to me how quickly people have forgotten the wreckage that occurred as a result of the economic crisis. 750,000 jobs a month were hemorrhaging in the country. We watched some 10 million people lose their jobs. We watched 5 million homes go into foreclosure. Somewhere between 13 and 20 trillion dollars in national wealth evaporated almost overnight, and many of those people have failed to ever recover as a result of the damage that was caused by the economic collapse of 2007, 2008. Over that period of time in crafting the legislation, we tried to do three things, basically. One was to stabilize the financial institutions, and we did that, in my view, by insisting upon more capital, less leverage, greater liquid assets. Today, $600 billion have ended up going into the banks, providing the kind of capital that hedges against the difficulties that created the problems back in the first place. Greater transparency. One of the major battles was to dealing with an incredible derivatives market that had grown from $90 billion to $900 trillion in little more than a decade, with little or no transparency. The bill requires great transparency in that particular area. I was disappointed. I know others were. I'm appreciative of Elizabeth and others. Last year, when some of our colleagues up here talk about helping out small banks, the only effort they've made to make any change in this bill was to deal with the derivatives market. And I can guarantee you small banks have very little to do with derivatives. And yet that was their major legislative effort over the last 2 years. And then thirdly, the whole question of dealing with consumer protection. And the great news, yesterday Barney Frank, my partner in all of this on the House side, and I went to the Consumer Financial Protection Bureau to meet with the staff and others who'd gathered from around the country. And Rich Cordroy has done an incredible job over the 4 years that that agency has been operating. Just some of the numbers that people need to know, what a difference it has made. Some 650,000 consumer complaints have been handled by that agency in 4 years. 17 million of our fellow citizens have had billions of dollars returned to them as a result of their efforts in the area of auto loans, student loans, mortgages. But for that agency's existence, we'd be back at a time when it took separate pieces of legislation to address legitimate consumer interests and damage being done to them by the financial services sector. And then lastly, too big to fail, which has been a constant refrain of the opposition. And again, we don't know yet whether or not what we've done will work. Time will tell. Hope we never have to confront it. But by insisting upon funeral plans within these institutions, insisting that there be resolution authority and that there be stress test of these banks, in a sense, would make a huge difference, along with FSOC, looking over that horizon to make sure that product lines and institutions are not posing financial threats, not only in our own country, but globally as well. So today is a day of celebration. My hope would be that we'd be able to develop more bipartisan support for what I believe is sound legislative ideas. We never suggested we wrote the 10 Commandments here. This is a bill, a complicated bill. And certainly there'll be issues down the road that probably need some modifications. That doesn't bother me at all. But it ought to be done through the prism of trying to improve and strengthen and protect the American consumer from the kind of damage done to them by institutions that deregulated and did everything they could to rip off innocent people in our country. So today I'm very grateful to the leadership for their support, grateful for the invitation to come back today to celebrate this, grateful for the efforts being done. Sherrod, I thank you immensely, and the members of the Banking Committee for the efforts you're making to see to it that those kind of oversight hearings are going to produce the kind of information people ought to have to make good decisions when it comes to the economic future of our country. And I thank you very much for inviting me to come back today. And I don't know who's next on this. Jeff?
Thanks so much, Chris. And in fact, my involvement in the Banking Committee began when I was speaking about predatory mortgages and the need to take them on and end them in caucus. Chris Dodd slipped into the seat behind me and said, we could use your help on the Banking Committee. So thank you so much for drafting me into this effort. It's one I've cared a lot about ever since I started working with Habitat for Humanity and saw the power of home ownership and the destructive impact of predatory home loans. Certainly there is a lot to celebrate from the last 5 years. One is the end of those predatory teaser rate mortgages and the steering payments that turned our loan brokers into basically salesmen, steering people from good mortgages, wealth-building mortgages, into predatory wealth-stripping mortgages. Certainly we should be celebrating the success of the Volcker Rule to take on the Wall Street, big bank, casino-style hedge funds done in insured institutions, FDIC insured institutions. And of course, the CFPB, Consumer Financial Protection Bureau, is absolutely a success, a resounding success, having returned, as noted, over $10 billion to over 17 million Americans. But here we are at the 5th anniversary, and some in Congress want to turn the clock back. They want to put Wall Street back in charge, take away the rules, put us down the same predatory path we were on before that damaged so many American families. And we must not let that happen. It is no question that big banks will exploit every opportunity to make money, and that includes opportunities that hurt ordinary people. Just think about some of the things that have unfolded over the last 5 years. We had the London whale, which is a reminder of how taxpayer-subsidized hedge funds, in this case operating out of London, can take big bets and bring down a financial institution, or at least do deep, substantial damage. We had the LIBOR scandal, the London Interbank Offer Rate scandal, manipulated indexes that essentially provided a foundation for consumer loans. We had the manipulation of the electric markets and the resulting settlement with J.P. Morgan. We had the New York Times report on the manipulation of the aluminum markets and other commodities. And we had the HSBC money laundering scandal, in which hundreds of billions of dollars were laundered basically on behalf of drug organizations and terrorist groups. So time and time again, we realize that we need strong rules to rein in the practices so that we have a banking system and a financial system that works for working Americans. That's what this is all about. The price of that is eternal vigilance. So that's why we're here saying today there's a lot to celebrate, but a lot of work remains ahead. And in terms of that work, let me turn to Chris Coons, the ranking member of the Financial Services and General Government Subcommittee of Appropriations.
Well, thank you, Jeff. 5 years ago, as Senator Dodd was standing at the White House and they were signing this bill, I wasn't even a member of the Senate. I was a local elected official in Delaware. But as the financial services collapse, as the collapse of our mortgage system and our banking system and our market happened, I saw the wreckage at the local level in my community. I saw the thousands of folks lose their jobs, lose their life savings, lose their homes. And so when I had the opportunity to join the Senate and later to join the Appropriations Committee, I was thrilled with the opportunity to take up my small role in making sure that we provide the resources that regulators need, in making sure that the structures that were created by the Dodd-Frank bill work well for the American economy. As you just heard from Senator Merkley, we need predictable and fair rules of the road. I represent a state where tens of thousands of people work in the financial services industry, and I see the positive values of having a robust and a successful financial services sector in my state and for our whole country. But if we don't have fair and predictable and reasonable rules of the road, if we don't have skilled and supported and effective regulators, we will inevitably return to a time when the financial services sector in our country will lead into risky lending and will lead into inappropriate lending and will lead themselves into more and more innovation that eludes our ability to retain that safety and stability and soundness that is the hallmark of a successful financial services sector. So in the Appropriations Committee, where we will be taking up the financial services bill later this week, if there are efforts to roll back the support for the CFPB, if there are efforts to roll back support for the core structure of Dodd-Frank, I will work against it. As you heard earlier, in every possible arena, from the Banking Committee to the Budget Committee to possibly the Appropriations Committee, on the House side, there have been efforts to roll back Dodd-Frank. And so I look forward to working with the leadership in my caucus and others to raise the alarm and to raise concerns. Is Dodd-Frank perfect? No, as the architect and author himself said, it needs to be improved. There are things that we should be able to come together in a bipartisan way to do to make sure that Dodd-Frank works not just for 5 years, but for the decades to come. But in the short term, let us not have a short-term memory and forget the really significant wreckage caused by the financial collapse and the ongoing need for strong and effective and fair regulation. With that, I'd like to turn it over to Senator Durbin, our whip, and a genuine and persistent and engaged advocate for consumers and leader in our caucus. Senator Durbin.
Thanks, Chris Coons. It's an amazing story when you think of it. The United States facing a recession, the likes of which none of us had ever seen in our lifetime, hearkening back to the Great Depression, the businesses that failed, the homes that were foreclosed on, and the jobs that were lost, and then an effort by the United States Congress to have a lesson learned and to make a difference in the way we regulate and manage the financial industry in this country. It was an ambitious undertaking and an amazing story that we passed this legislation. It's such an amazing story, they ought to make a movie out of it. Starring. Two aspects of this bill which I'd like to focus on. She gave us a speech, and I don't know how many years ago, but Elizabeth Warren at the time was a law school professor who suggested the creation of a Consumer Financial Protection Bureau. We sat down and worked on the bill together. The bill became a reality because Chris Dodd and the members of the Banking Committee decided to put it pen to paper and make it work. What it's done to protect consumers across America is unprecedented. There's never been an agency like it. And when you think of the specifics of what they've done, they're amazing. Richard Cordray, an incredible leader in that agency. Holly Petraeus, who has stepped up and found the abuses which have taken place when it comes to our military and speaks with authority about how we need to protect them through this agency. Efforts to try to stop the exploitation by for-profit schools. This agency has been a leader. Thank you, Elizabeth, for your inspiration. There was a time when I thought she would head up that agency and thought that would be just perfect, but turns out there was something even more perfect, and that was having her as my colleague in the U.S. Senate. We're glad you're here and continue on to come up with these great ideas. The only other issue I'm going to mention to you has to do with this. It's a debit card. Most people are not aware of the fact that in the old days, when you use this debit card, there's a swipe fee that had to be paid. On average, it was 44 cents a transaction. That was the amount charged by the issuing banks, Visa and MasterCard, to retailers across America. No transaction, no negotiation, take it or leave it. You want to use one of their cards, you pay their swipe fee, 44 cents. When we asked the Federal Reserve, well, what did it really cost the issuing bank, Visa and MasterCard, for each transaction? 11 cents. 4 times as much were being charged in each transaction. Well, we ended up with a Washington-style compromise, which I think is too generous on the other side, but about 24 cents now is what's charged. What does it mean? Every year, according to Richard Shapiro, there have been $8.5 billion saved, not collected in swipe fees, and $6 billion passed on to consumers. That is a positive development of this Dodd-Frank bill, which continues to benefit retailers and consumers across America. Make no mistake, our folks on the other side of the aisle would like to see this whole effort, this agency, and all of these reforms we've discussed disappear overnight. We're here to fight them and make sure it never happens, and one of the leaders in that fight is my fellow senator in leadership and a longtime member of the Banking Committee in the House and the Senate, Chuck Schumer.
Well, thank you, Dick. And first, let me welcome Chris Dodd here. He did an amazing job. I saw him through thick and thin, under the most difficult of circumstances, be steady and strong as a rock, and the result is a really outstanding piece of legislation. I want to thank my 2 colleagues, Chris Coons and Jeff Merkley, who pulled this event together, and for the great job they have done in their respective ways. Sherrod Brown has done a really fine job as ranking member of the Banking Committee. He and Jack and those of us on the committee have tried to be Horatio at the bridge, making sure that none of these great things that we did are repealed, and the leadership team, Dick and Patty and Harry, who have made it clear to the colleagues on the other side of the aisle that we shouldn't undo the good work we've done. So we're here today with a simple message for those who would try to weaken or undermine Dodd-Frank. As we like to say in Brooklyn, forget about it. If Dodd-Frank opponents try to open up loopholes, weaken regulations, slash funding for our regulators, or kill Dodd-Frank with 1,000 cuts, they're going to find Senate Democrats standing arm in arm against them. Dodd-Frank's working. Our financial system is more stable. Consumers are better protected. And while we still have more work to do to get middle-class incomes up, job growth is blossoming, unlike the predictions that we heard from our Republican colleagues when we passed this legislation. No law is perfect, but each and every single one of us here today is committed to making sure the rug isn't pulled out from under homeowners, from people saving for retirement, and from millions of Americans who have relied on the CFPB to protect their interests. I'm proud that we came together to pass Dodd-Frank 5 years ago. I'm still prouder today to defend it. And now with that, let me call on my colleague in leadership and someone who has been a strong voice against special interests and for the average middle-class person, and that is Patty Murray.
It is an honor for me to be here today with former Senator Chris Dodd, who led this effort in the Senate, with the current leaders today who are continuing the fight, and all of our leaders into the future who stand behind me to make sure that we do not go backwards. 5 years ago today, as we've all said, our country passed the Dodd-Frank Wall Street Reform Act to put transparency and stability back into our financial system. And with that law, we put the brakes on Wall Street's reckless behavior and showed Americans what and who we stood for. And as you know, the fight is not over. We have Republicans who want to roll back the clock and put the big banks back in charge again. They may think that families have forgotten the loose regulation, the trickle-down economics, and the excessive risk-taking that erased literally millions of jobs and wiped out retirement accounts for families across our country. But I assure you, Americans have not forgotten, and we are standing here together today to say we will not go back to the bad old days. We will keep building on the progress we made 5 years ago to make sure our economy continues to recover, that we continue to grow from the middle out, and we continue to fight for middle-class families. With that, it's an honor for me to introduce to you Senator Jack Reed, who has been a leader in this battle.
Well, thanks very much, Patty. As my colleagues have pointed out, 5 years ago, we were in an economic freefall. Jobs were disappearing. Businesses were going bankrupt. Financial institutions were threatened with collapse, and many Americans were referring nervously to their retirement plans as 201k plans. Now, and in part because of Dodd-Frank, we've restored our economy, we're growing jobs, we're moving forward. A lot of this really was the work of Chris Dodd. No one could have put this bill together other than Chris Dodd. I saw it firsthand. The way he orchestrated the committee hearings, the way he dealt with, on a bipartisan basis, with his colleagues, it was an extraordinary effort, and one that he deserves more praise than he's received. We have, through Dodd-Frank, reestablished, I think, a sound financial foundation. Our banks are stronger, better capitalized. We have much more transparency, and we have, for the first time, a real commitment, I think, to consumers, and that is a great tribute to Elizabeth Warren, whose inspiration for the CFPB still continues to make a difference in this town and in this country, more importantly. But the work is never over. Unless we maintain the rigors of Dodd-Frank, unless we fund the regulators so that they don't lose sight of their responsibility to protect financial institutions and consumers, unless we continue to make sure that all of the provisions are improved as we go forward, that regulations are adopted, and one of the real ironies is 5 years after Dodd-Frank, we're still trying to get some basic regulations done. And that's not by accident. That's by very active, continued opposition to some of the fundamental rules of Dodd-Frank. So we have work to do. We've got to get the regulations done. We've got to look at improving what is a very good piece of legislation, and then we have to fund the regulators so that they can do their job, to protect the system, but more importantly, to protect the American people. And with that, let me welcome Senator Elizabeth Warren and thank her for all she's done.
Thank you. Thank you, Senator Reed, and thank everyone who's been here today. It really did take extraordinary leadership. What Senator Dodd was able to do was nothing short of remarkable, but it took a lot of people who got out there and did the work, and I saw it firsthand with Senator Reed. I saw it with Senator Merkley. I saw it with Senator Brown. People who really got out there and said, we're going to dig deep, we're going to pull hard, and we're going to make this happen. So today, I just want to say three numbers to get us going, and that is $10,650,008. $10 billion, that's the amount of money that this Consumer Financial Protection Bureau has, in the last 4 years, forced the biggest financial institutions in this country to return directly to people they cheated. 650,000, that's the number of consumer complaints that this little consumer agency has handled. And 8, that's the number of Republican presidential candidates who have declared that they would repeal Dodd-Frank if they get the chance. So the first two numbers remind me, 10 billion and 650,000, what we are fighting for. We are fighting to make a difference on behalf of Americans all across this country. We are fighting to help level the playing field. And the 8 remind me what we're fighting against. We're fighting against the people who think it's okay to jump into bed with the biggest financial institutions in this country and try to roll back every protection that was put in place 5 years ago today in Dodd-Frank. So I just want to say, I am proud to be here today. I am proud for what the Consumer Agency has done, what Dodd-Frank has been able to accomplish, to be able to have a chance to fight alongside these people. Proud and determined that we are going to fight not only to protect the consumer agency, to protect the gains that have been made with Dodd-Frank, but to expand them so that truly in this country we will have an economy that doesn't just work for those at the top, but that is a level playing field that gives all families a chance to build some real security. Thank you. Back to you, Senator Brown.
Questions to any of us?
Thank you.
Thanks, Chris. Yeah.
When Republicans first took over the House and now the Senate, they focused a lot on Obamacare, and they've also criticized Dodd-Frank a great deal. I mean, do you sense that Dodd-Frank is more popular with the public than Obamacare? Is it something that Republican attacks don't resonate as much as it does with the Affordable Care Act?
I think the way you lay the scenario out, that's right. I think that when you look at some of the numbers that Elizabeth mentioned, when you realize how the country is continues to read these stuff, people continue to read these stories of major settlements, major fines, wondering why people didn't go to prison, knowing that Wall Street executives still get big bonuses. They know that we did the right thing here. They know that, and Republicans know that they have refrained from bringing that to the floor in any kind of an up or down vote because they know what the public reaction will be. It doesn't stop Republican leaders in the Banking Committee and the Ag Committee and the Budget Committee and the Appropriations Committee from more quietly trying to slice off parts of Dodd-Frank. You looked at the Shelby bill that came out of banking on a bipartisan vote. The three of us opposed it. We had a counteroffer that was legislation that clearly would work for smaller banks. They wanted no part of it because they wanted to do major surgery on FSOC and on the Fed and on a whole host of other issues. So I think that speaks pretty clearly.
Oh, I agree with Senator Brown. I mean, I think he's got it exactly right. Look, people who've been cheated on mortgages are Republicans and Democrats, independents and libertarians. People who've been cheated on credit cards, on payday loans, people who've had their credit reports turned upside down. Those are people who understand both why we need an agency and how this agency is working. Literally millions of people have now gotten help directly from the Consumer Financial Protection Bureau. But even those who haven't yet gotten a check, they see it and they understand what it means to have somebody on their side. You know, the Consumer Financial Protection Bureau is an example of government that works. Far too often around this place, all of the rules, all the laws are tilted in favor of the big guys. They're there to help those who have armies of lobbyists and lawyers. The consumer agency is there for families, to just level the playing field, to give them a chance to build some economic security. And it's got good, strong support all around this country.
You know, I hold a lot of town halls. I've held more than 250 since I came to the Senate in 2009 and engaged in this conversation. But the number of citizens who have come to those town halls and said, we're upset with what you did, reining in Wall Street, taking on the predatory mortgages, that number is zero. Yeah. And I think that speaks for itself.
That's right.
Senator Warren, Cash, you've been critical of some of President Obama's appointments as federal regulators. Do you have any thoughts on his announcement yesterday that he'll be appointing Catherine Dominguez to the Federal Reserve Board of Governors? Do you have any thoughts on her and that nomination?
I'm looking forward to meeting her and having a long conversation with her.
Is that the type of candidate you are hoping for him to nominate?
I'll find that out when I meet her and have a chance to talk to her.
Senators, I was wondering if I could get your thoughts on what sort of job the regulators have done implementing the law. We're 5 years in, the law isn't completely done, but the broad framework seems to be in place. Do you think is Dodd-Frank as strong as it should be at this point, given how the regulators have put it in place?
You may remember that 5 years ago today, I believe it was actually the day the bill was signed, the chief financial services roundtable lobbyist said, after the president signed Dodd-Frank, said, now it's halftime. And you see the pressure that the 2,000 lobbyists or so for financial services, opposed to the couple of dozen public interest advocates there have been on the Hill, agencies and groups and not-for-profits. You've seen the pressure they've put and the way they've caused too many of these rules and regulations to be slow-walked. We see the settlements continue. We see the problems continue. But we've also seen, I think, partly from Dodd-Frank, partly because of discussions that we have and statements that all of us have made, you've seen higher capital standards coming from OCC and the Fed. You've seen the decision, the announcement today or yesterday that Chair Janet Yellen made about the banks being smaller or coming up with more capital. So it's clearly improving. We still have much to do. You still see the issues of apparently Senator Shelby is going to go to the Appropriations Committee with dramatically changing the Consumer Bureau to make it less accountable to the American public, frankly. And at the same time, we're not getting, we've had no hearings or no movement on any of the nominees that can protect the public, whether it's the Fed or whether it's the SEC or anywhere else. So still a lot to be done.
I would only add to that, I think it's uneven. The implementation of Dodd-Frank has been uneven. The consumer agency has met all its deadlines in getting its rules completed as required by Dodd-Frank. It had to go from 0 to 60 in 12 months and go operational exactly 365 days after the bill was signed into law. So all the numbers we talk about and all that the consumer agency has managed has actually been in 4 years, and they really had to build that from the ground up. I think it's just been an extraordinary effort, and it shows how they came together to do all of the parts. They had to write regulations, they had to put in a plan and execute on a plan to supervise the biggest banks, to deal with the non-bank lenders, to set up the hotline, and they did it, and they've been effective at doing that. Over at the Fed, for example, we've seen some rules that have been delayed and delayed and delayed again. On some parts of it, we're seeing movement that we would have liked to have seen much earlier, but the point is it's finally seems to be coming. We'll see, for example, what happens on the living wills later this summer. Is there really a plan to deal with the too big to fail financial institutions that wouldn't require either bailing them out or watching the economy crash again? And that's just an open question at this moment in time. Over at the SEC, there are a lot of rules that should have already been completed and have not been.
Are there any kind of bipartisan talks going on a more tailored fix-it bill, either related to the Shelby one or otherwise, or are the parties just at a complete impasse?
We continue to try to encourage at the staff level in banking and Senator Shelby and I to encourage conversation on every level. There are lots of informal discussions going on among members of both parties. I spoke yesterday to the head of the community banks. There's a lot of interest from a lot of us, a lot of people around the country of both parties, and a lot of us on the Senate Banking Committee about coming to an agreement on legislation similar to what we offered, which came from bipartisan bills. As long as Republican leadership and wants to see major surgery on FSOC, raising the SIFI designation to $500 billion. Some of the bridge is too far on GSE reform. We won't come to an agreement, but we could come to an agreement tomorrow. And I'm imploring Senator Shelby to move in that direction, as I hope they do on the nominees that have been sitting out there in some cases for months and months, in other cases shorter periods of time. But this is the only committee that's not actually moved on any nominees, the only committee in the Senate, and it's time we do that too.
Last question.
Senator Warren, what regulations do you believe are necessary in addition to the work done at Dodd-Frank?
So I would like to see a change in how SCRA is handled, and that is the Servicemen's Relief Act that governs enforcement of the laws that protect servicemen and women against interest rates that are usurious, against financial products that are loaded with tricks and traps. We've got some good laws there, but I believe they should be brought over under the Consumer Financial Protection Bureau, where we've got Holly Petraeus to lead up the Service Members Affairs Division and to get some coherent enforcement of those laws. You know, this is one of those where long ago, these laws date back to the time of the Civil War, of trying to protect those who are in service to the country. Right now, those laws are better on the books than they are in action. And if they were brought over to the Consumer Financial Protection Bureau for enforcement, instead of the Department of Defense that is not well designed to enforce these laws, our service members would be better protected. So there's an area that we could improve the laws. And I should say, it is part of the package that Senator Brown was talking about that all of the Democrats on the Banking Committee have embraced.
I'll just add to that, it is time that we take on the payday loans across this nation. A number of states have taken on these 300 to 500% interest rates. We've understood for millennium the damage done to nations when there are usurious interest rates, but rarely has a nation seen 300 to 500% interest rates. This is legalized loan sharking. It needs to come to an end. We have ended it for our service families because our military leaders testified about how destructive it was to military families to allow these type of predatory practices. But what is destructive to a military family is also destructive to a non-military family. The CFPB is now laying out a framework for taking on these predatory interest loans, and it's none too soon.
Yes. We've ended it on paper. We just need more jurisdiction. Thank you. This way. Got it.